let's talk about finally your charities. So you've
Sure.
raised close to $27 million
Mhm.
so far. How was that money raised, and what do you plan to do with
Sure.
it?
Well, I volunteered for a medical research charity called the SENS Foundation back in 2006 in Cambridge, founded by Aubrey de Grey. Great guy, very smart guy. And I always wanted to do more for them, and I never got around to it. So I said, you know what? I'm making a new coin. It's called Pulse. It's better than Ethereum. It fixes ton of things that are wrong with Ethereum. It gets rid of the miners destroying the environment. It's better for the price. It has better staking where you hold your keys instead of giving them to somebody else. It's the world's largest airdrop. You get 10,000 per coins. It burns 25% of the fees. There's no inflation. It's amazing. And the code's done. And I said, you know what? I got to give this out for free to somebody. So who am I going to give it to? I'll give it to people that donated to the SENS Foundation. And so the SENS Foundation is a registered 501c3 charity, has been for over a decade. You can get a tax write-off by donating to them from the United States, Canada, the UK, some affiliate countries in Europe. And then they're going to go do medical research that may save your life, your kids' lives, your pets' lives. It's absolutely amazing. This isn't like one of those charities that you go give to it and you and your kids don't benefit from it. This is something that can benefit you and your family and the rest of mankind for the rest of the time that we're on this planet. So their annual budget was about $1.5 to $2.8 million usually. Occasionally, Vitalik Buterin, that founded Ethereum, would hit them with $4 million. He hit them with $4 million a couple months ago. He hit them with $4 million in 2017. Anytime we get one of these big run-ups, which, by the way, is usually following by a crash, which I think we are due for the rest of the crash. We're already down half. I think we'll go down another 75% to an 85% total drop.
Wait,
Nobody else thinks that.
80% total drop for what?
I think
Richard?
Bitcoin will tap $10,000 from its high of 65,000 because that's
Okay.
what it normally does. It drops 85%. Ethereum usually drops 95% because it has lower liquidity. So it acts like a leverage position on Bitcoin to some degree.
Well,
So Bitcoin runs up, ETH runs up higher.
The people in the Bitcoin ecosystem tell me, look, Bitcoin is unlikely to do what it has been doing in the past couple of cycles, which is drop 80%, precisely because new institutional money have already been placed in the Bitcoin ecosystem. Institutional investors now with more money are likely to make the coin less volatile, so to speak.
It's not
How
true.
would you respond to that?
They're wrong and I'm right. I have a history of calling the top. I called the top on the day. I called the $65,000 top on the day and drew the chart. And then I told you that last cycle, Ethereum topped 27 days later. Guess what happened this cycle? Exactly 27 days later, Ethereum topped. I got it 100% right. You couldn't possibly do better. And I did the same thing in 2017. So if you go to richardhart.com, you'll see me bragging about all the things I get right. And I don't delete stuff. So it's not like I'm deleting bad calls. No, I made one call on Bitcoin in about 2 years, and it was to call the top. So all those guys that have these fan fiction theories about, the price can't go below the cost of mining. They think that the cost of mining holds the price up. Nope, didn't last cycle, won't this cycle. Mining price follows the price. It doesn't lead it. People look at trailing indicators and think they're leading indicators, like Google search volume. You can't trade the Google search volume because it's a trailing indicator, not a leading indicator. These are reflexive systems. They do not have base demand. You do not have to pay your rent in crypto. It is a purely speculative play. The people bought because the price went up, so they bought, so the price went up, so they bought, so the price went up, and then it gets punched in the nose hard enough where it drops outside people's comfort zone, and the people that bought the dip lost. You could have bought 20% dips the whole way up for a year and made a killing. But this time, when you bought the 20% dip, you lost half your money. And now people will sell because the price went down. So they'll sell because the price went down. So they'll sell because the price went down. And this concept that the world's richest guy can buy, who do you think is going to follow him up? You got another world's richest guy waiting behind there to follow him up to buy his bag, to buy the top right after him? It's crazy. No. Once you've already got the world's richest guy on board, it's time for a dump. You got him. And then when you finally shake everybody out and you get the last weekend out, then you get to go up again. I've been in this for years and years and years, and I have seen these cycles over and over again. And I'm the guy that calls the prices right. And all these other guys that talk, link me to their price call and show me where they overperformed.
Okay, so all right, so price call history aside, so you're talking about a drop down to $10,000. Why are we in a bear cycle right now?
Well, basically, in a reflexive system, you have a parabolic rise up. And what that means is that you make larger candles in shorter time frames. So candles have, usually you're watching the daily candle, weekly candle, and they get longer and longer and longer in shorter and shorter time frame, and it looks like a hockey stick. And when you finally fall out of the parabola, the rule of thumb is that you drop 85% of the move. But in Bitcoin, you don't just drop 85% of the move normally, you drop 85% of the total. So we have seen hockey stick run up, fall out, drop 85% over and over and over again. And you know what else we normally see? There's a chart you can Google called the psychology of a market bubble. Run up, dump, return to normal, the bull trap. This is where we are now, in my opinion. So Bitcoin went in 2017, end of 2017, it went to 20,000, dumped to 10,200, and then went back up to 17,400. It went back up from 10 to 17. It went up 70% again. Got everybody long. Dun, 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 down to 6,000, bounce a little bit. Trapdoor opens down to 3,000. Bump and run bottom up to 14, which was a Ponzi scheme out of China called Plus Token. Then they got arrested. Day of their arrest in China, doom, back to 3,800. Find a bottom, go back up. COVID dip. Bitcoin dropped 65% in 2 weeks.
What's going to happen to Hex then if Bitcoin drops to $10,000?
Bitcoin already dropped over 55%. Hex kept making new all-time highs. Ethereum already dropped 60%. I'm sorry. Bitcoin dropped over 55%. Hex made new all-time highs. Ethereum dropped over 60%. Hex made new all-time highs. Hex is decorrelated from Ethereum and Bitcoin because the majority of its liquidity is tied to the dollar, not tied to a cryptocurrency. Most cryptocurrencies move up and down together, not because of an evil mastermind where there's someone saying these are sympathetic products so they should trade similarly. It's actually just because they're bonded by the liquidity in their trading pairs. So there was a thing called, I'll tell you where I learned this. I'm the person that popularized this idea. I call it Hart's Law, that the reason all prices move together when things are traded versus each other is because they're bonded together by the liquidity in their pair. There was something called unisocks, literally just a pair of socks. They created a trading pair versus the Ethereum unisocks pair. Ethereum price goes up 20x. Guess what happens to the price of a pair of socks? It goes to $40,000. That's when I learned, wait a second, these socks aren't worth $40,000. Why are they priced at $40,000? Because you can exchange them for something that went up in value 20x. And so when you have things that are tied together that are interchangeable, anytime one of them goes up versus a dollar, it pulls them both up versus a dollar because they're interchangeable. And then if the world wants to exert force to make that stop working, it takes active, you have to keep selling the price down. Like if you buy Bitcoin and the price goes up 10x, you've got to sell massive amounts of your coins to try and maintain whatever you think your proper ratio should be. Oh, I only want 1% in crypto. Well, you're going to have to sell it a lot, dude, because it will become your whole portfolio because it appreciates so much.
Just one point, Richard. You said the Hex's liquidity is tied to the dollar. What do you mean by that?
Yes. Well, when you go total up all the order books for a speculative instrument, you can see what the numeraire, the denomination of those order books is. So in cryptocurrency, such as Ethereum, the majority of the liquidity for Ethereum is Bitcoin. And the majority of liquidity for Bitcoin is the dollar. And so when Bitcoin moves down versus the dollar, Ethereum moves down versus the dollar, and all the altcoins tied to Ethereum move down versus the dollar. And when Bitcoin goes up versus the dollar, Ethereum goes up a little bit more because it has less liquidity, so it acts like a leverage position. And then the altcoins go up even more because they're even less liquid. And so what you have is a movement like this. Bitcoin goes up, Ethereum goes up more, alts go up more. And then when the market peak comes, when you fall out of your parabola, Bitcoin goes down, Ethereum runs for 27 days, and then it goes down more, and then the alts go down more until you finally reach capitulation at the bottom. This is how a reflexive system works. You're not going to find these ideas anywhere else. So it's a good thing we're talking.
How does that relate to Hex being tied to the dollar?
Well, we don't have that cascade of liquidity. So Bitcoin pulls Ethereum, we don't care. Only 15% of liquidity in Hex is tied to Ethereum. 85% is tied to stable coins that are tied to the dollar. So when the Hex price moves up, it's because people buying Hex.
Stable coins. Okay.
Right.
But how does it, if it's tied to stable coins, how is it able to have a 2,700% return over the last 1 year? I'm confused.
Well, the same way that Bitcoin did. People buy it and they don't sell it. So anything that people buy and don't sell is going to have insane price performance.
I see.
There's just very little of it for sale.
Is there a cap? Is there a market cap on Hex, by the way? Sorry, is there a coin limit? Sorry, not a market cap. I meant coin limit cap.
No. But you have to understand, inflation in Hex is not like inflation anywhere else. If you're an average length staker, there's no inflation to you because you're just rewarding yourself with extra coins. Inflation in a system with negative externalities like Bitcoin or Ethereum is very damaging because it goes to destroy the environment and harm the price. But inflation in Hex, who's it going to? The people that hold the Hex. So it's not causing negative externalities. So the inflation in our system is nothing like the inflation in other systems. Furthermore, even if it was, it's very low. It's 3.69% maximum, which is equal to and less than the 3.89% that Bitcoin had when it first did 20,000.
Okay, excellent. Well, Richard, I want to thank you so much for coming to the show today.
Can I mention one thing?
Absolutely, sure.
If you want to support medical research and you want to save your lives, your friends' lives, your family's lives, someone has to do it. And unless you're going to become a biologist and start doing it yourself, you got to pay some people to do it. Go to sens.org. It's only about 12 hours left. And even if it ends and you don't make it by the 12 hours, go there anyway and consider donating some money to save some lives, because you don't want to do what Steve Jobs did. Steve Jobs died a very rich man, and he's a very dead man now. He lost the game. He knew he was 40% likely to die of heart disease, 40% likely to die of cancer, and curing either one of those is only worth 3 years, because the decaying system just causes the next thing to kill you. We need things that will give us 3 or 4 years, because getting those things will be worth more than killing or curing cancer or heart disease, which kill 40% of people. No one else is going to tell you these numbers, but they're the facts. So go to sens.org and consider donating. All right.
Well, I appreciate the philanthropic work you're doing on top of the projects you're working on. Many people would, Richard. So thank you for that message, and thank you for coming on the show today. I appreciate it.
My pleasure, man. Thanks for having me.
And thank you for watching Kitco News. Don't forget to subscribe to our YouTube channel and follow me on Twitter @DavidLin_TV.